Jim Cramer, congratulations on 20 years. I'm so excited for you. You know what? You put in the work. You deserve every accolade that you get. You are Mad Money, and Mad Money is you.
On behalf of the entire Mad Money community, congratulations on this incredible achievement.
Congratulations. I'm so proud of you. Booyah.
What you've accomplished over a 20-year period is quite extraordinary.
We all see how hard you've worked all these years and how clean your mission has been all that time. Congratulations, and I'll see you at work in the morning.
We're only getting better, so don't worry about how old you are. And I love you, buddy.
Dad, congratulations on 20 years. I am so grateful that you're my father, and I wouldn't have it any other way.
James, I can't believe it's 20 years. 20 years for your show, and happy show.
It's been an incredible 20 years of Mad Money, and I'm so grateful to all the guests who joined us and the staff members who helped us along the way, and of course my daughter and my wife. But we're not done. I still want to talk about two big quarters we saw yesterday from Amazon and Apple. They're just too important to ignore. I don't know a soul who has any other kind of phone. I don't know anyone who isn't a Prime member. It's not easy to get that kind of brand loyalty. It's not easily lost, and both companies, no matter what their stocks are saying, are indeed loved. These are complex businesses, though. Apple has cell phones and wearables, but also has a service revenue stream that matters tremendously because it's sticky and it grows as people get more comfortable with the whole family of products. Amazon's a retailer with an enormous web services business as well as an advertising division that's got incredible gross margins. The complexity does not help the valuations, though. Wall Street loves simple stocks that are easy to get your head around, and these are anything but simple. Last night, Apple reported a very fine quarter, but because of tariffs on goods made in China, this budding consensus is that this was the last good quarter. So the stock cratered, falling $8 to 3.74%. Wow. The tariffs could really play havoc with the numbers. Apple's trying to move enough cell phone production from China to India to get a lower tariff rate, but we have no idea how long it will take to move a significant amount of their manufacturing, so there's a lot of guesswork. We also had a disappointment on the service revenue front, and it comes on top of two lawsuits that can hurt service revenues itself. The Epic suit involving how to pay for downloaded games, and the Monopoly suit that calls into question Google's decision to pay Apple $20 billion for its right to be their default search engine. These legal issues are rough. Put it all together, and you can understand why the stock got hit today. How about Amazon? The problem here is that the giant web services business seems to have skipped the revenue beat, with growth declining from 19 to 17%, even as though the margins increased. Now, Amazon stock was able to shrug that off, finishing virtually unchanged, because it could have been avoided if they had more computing power, meaning more chips from NVIDIA. Not all that coincidentally, NVIDIA had a very good week. Apple, no comeback. But it just couldn't make it. I think it could overcome the service revenue miss. It's not like the business has never disappointed before. I also think that any resolution of the lawsuit with Google could be years away, and it isn't clear if the contract can be voided. No, the real problem with Apple is that it's caught in the crossfire of this trade war with China. Right now, I think there are two camps at the White House. The camp that says Apple doesn't deserve this, but CEO Tim Cook will be able to figure out what to do. After all, Apple's created 2.9 million jobs here. About 1.5 million people helped to put together Apple hardware in China. Tim Cook is a champion of the United States and China. He's almost a mystical figure who's managed to straddle these two countries better than anyone. The other White House camp, though, says that China and the United States simply can't be straddled. And anyone who's trying to do that is not a good actor. This camp has a lot of sway with the president. Without a big trade deal with China that effectively rolls back nearly all the tariffs, Apple's earnings are indeed in trouble. Unfortunately, I believe a friendly deal with China, I think, is going to prove elusive. We are choosing to own both of these stocks for our Charitable Trust because I believe in them long term. But only one is likely to snap right back, and that is Amazon. Apple, I fear, will be stuck in the penalty box for playing by the rules that our governments endorsed ever since China joined the World Trade Organization in 2001. But that was then with a very different president, and this is now. I like to say there's always bull market somewhere. I promise I'll find it just for you on Mad Money. I'm Jim Cramer. See you next time.